All right, we are live. Welcome to the show, everyone. Today we've got Austin Federa from the co-founder of Double Zero. Thanks for coming on, Austin. How are you?
Good. Thanks for having me.
Good. So we're pretty excited about this one. By the way, we just wanted to mention, really enjoy your recent update to your profile picture. Andreas and I were saying is when you posted the new profile picture, it was a good move. Looks great. I
Thanks.
just thought we'd open with that one. But yeah, it'd be great to get the kind of the cliff notes of Double Zero to kick us off. I think that's a good place to start. If you can give us an intro to that, what you guys are up to.
Yeah. So at a high level, we are doing for network connectivity what blockchains did for compute, which is to say, if you think about it, like what is Solana or Ethereum? They're really compute networks. There's a reason we call it the Ethereum virtual machine. It is a giant virtual computer. Um, and these are fundamentally compute networks, but they all run over the public internet today. And in running over the public internet, they're limited by the speed and performance that the public internet can provide. And so the kind of original idea for Double Zero was like, what if we used all of the tools and technology that TradFi does, that Google, that Amazon, that Microsoft, that OpenAI, all these companies that build fast private networks. What if we use that same technology, but we built it in a way that had multiple independent contributors, that had many people holding admin keys, that had sort of multi-party consensus in it? And at that point, we would have a global fiber network that kind of looked like a private fiber network, but was actually run by many independent contributors. And this would really be something that was faster than the public internet and would allow blockchains to hit their next level of performance and scale. And that's really like for years, the limiting factor for a blockchain's power and growth was the software. If you ran Geth locally back in 2018, like even on
Mm-hmm.
one machine, you couldn't get over 400 transactions per second. Now we have many blockchains that in testing environments can do hundreds of thousands of transactions per second, but they don't do it on the public internet. The question is why? And the answer is the public internet's too slow and is not built for this type of thing. And so we set out to build Double Zero to kind of solve that problem. And Solana is our first flagship use case because Solana's got two validator clients now that can do hundreds of thousands of transactions per second. But we're very much targeting the entire blockchain space and then moving out from blockchain in the future too.
I'm pretty technical. So what is a private network? Because I do software, so that's like
Yeah.
I assume it's like you're on the network at home, but the network happens to be connected to all the other validators that's working with Double Zero, right?
Yeah, it's kind of funny because networking is this whole part that's like critical to any modern software application, but almost no software engineers understand kind of anything about it.
Mm-hmm.
There's sort of this magical thinking of like, well, the data's processed and then the network just does its thing. And what we're really yeah, and like what we're really talking about here are like high performance dedicated networks. And this is the standard that every major financial technology company uses. Even like Facebook and Google, who you think of as like public internet companies, most of their data flows through private networks. And so Meta is actually the largest investor in fiber under the ocean of any company out there. And they're not doing it because they want to make the internet a better place. They're not doing it out of the goodness of their heart. They want your Instagram reels to load really quickly when you're in a country that doesn't have great internet access. And they want all of this fast connectivity to serve content because the more content they serve you, also the more ads they get to serve you. Like, these are all ad tech companies at the end of the day. But they've gotten to the point where in order to, say, enter a market like the Philippines, Facebook actually went out and built a ton of subsea fiber connecting the Philippines to the rest of the global internet backbone. Not that there wasn't internet before, but it wasn't to the level where you'd need to be able to get, millions and millions of people live streaming at the same time. And so, this technology not only are the connections much faster. Our network is mostly 100 gigabit links, and most validators today have, the best ones have maybe a 10 gigabit connection. Most have 5 or 2. So the real point about this thing is you can have faster connections. You have lower latency because it's now direct routing as opposed to the indirect routing. The internet routes you all over the place. If you ever do a trace route, you'll be trying to talk from London to New York, and half the time your traffic will bounce through Marseille. and then go out through like, yeah, it's really, really interesting. So, our whole thing here is you can also then use technologies that aren't available on the public internet, like multicast. And when you have something like a blockchain where what you have to do is you have to get data produced in one place to 6,000 other places as quickly as possible, multicast, which is hardware acceleration of packet replication, really is the best technology for this. The problem is you can't run it on the public internet because none of the ISPs can agree with each other on how to handle multicast data. And this is part of why these companies build private networks. It really, the analogy really is, it's like a highway versus, country roads. And it's like your private driver versus taking a taxi. Like it really is a very different type of networking environment that is much more high performance. And honestly, blockchain's gotten to the place where like it needs this too.
If you, so if there's today, are they not using multicast today?
Andreas,
Yeah. So
did you catch that? Also, the audio seems to be breaking up a little bit in the AirPods, Andreas.
yeah, I got a little bit of the breakup too.
Okay. I was asking.
Right,
I was asking if you watch a live stream on X or YouTube today, are they not using multicast?
They are not. No, there are some extremely
shit.
limited. Yeah, there are some. This is why it took people like 15 years to figure out how to stream like a major sporting event. The Super Bowl in the United States is barely 4K. And it's because, you can't do like in some very limited instances, like Verizon can, if you have a fiber connected TV, like a cable box, not even like a streaming service, like a cable box that has a fiber connection on it, on like Verizon in the United States, sometimes you can get multicasting of data through that. But for the most part, X is not using multicast because none of the delivery networks out to users actually support it. They may be using multicast to get the data, like, to basically exit points in, one in Europe, one in the United States, like basically the way a CDN would. A lot of CDNs run a private network on the back end, and then they have just sort of these public areas that they dump you out onto the public internet again. But no, all this stuff is not running on multicast. It's all running on unicast. If it was running on multicast, we wouldn't have all these like dropout problems and those sorts of things. It really is this thing where it's like FM radio. Each additional person listening to the radio is not a tax on the transmitter.
Mm-hmm.
It is in the internet because nothing was ever built. I mean, you have broadcast as a protocol, but again, it's not. None of this stuff is supported on the public internet.
Mm-hmm.
And even so, you need quite expensive and powerful switches and routers to really make use of this. And it's just this kind of crazy thing where we're still using basically the internet of like the mid 90s.
Oh, it's breaking off again, Andreas. Might be easy just to switch to the laptop.
Yeah.
Audio.
And done.
There we go. Much better.
Yeah, I was saying. I'm pretty sure we had broadcast UDP in the 90s. So
Yeah,
I guess the internet is.
Yeah, you didn't have it on the internet though. This is the really interesting pieces because you have to remember the incentives of a public internet company. What they want to do is they want to dump your traffic off their network as quickly as possible. And they largely want to dump it onto a network that's giving them about the same amount of traffic. Because the way that billing works between ISPs is all basically like, oh, you sent me 5% more traffic than I sent you, so you owe me on that 5% differential.
Yeah.
And so their incentive oftentimes is not to send traffic in the fastest way. It's to send traffic in the way that's most efficient for the like business arrangements that each one of them has. And in that case, that's usually not the most performant way to get there. I mean, we would do these traces about, a computer talking from New York to Singapore, and you'd see it, bounces up to Chicago, then it goes down to Atlanta, then over to Denver, then back to Chicago, then it goes up to Seattle, and then it finally goes across to like Tokyo, and it kind of makes its way down. But it's really interesting to see how indirect this traffic routing is. We've run into all of these kind of funny problems where, like, so in the US, like TV stations will get into what are called carriage disputes, where they just like a local network won't carry a television station for some reason. The same thing basically happens on the internet, where you'll have two ISPs that are just saying, hey, we're not like, I'm mad at you. I'm not going to let you plug your cables into my network. And so we've like done some work diagnosing stuff with validators where they're like, my connection to this node is like really bad, even though I'm only like a few 100 miles away from it. And we'll look, and their ISP is routing them like halfway around the world because they refuse to do this little cross connect with someone else just because, of a business side deal. And so the whole point of private networking and the whole reason companies embraced it so much in the 90s and 2000s is that they don't have to deal with any of this. Suddenly, they're using dedicated connectivity. And so for us, we're not building our own fiber cables, right? We have 11 independent contributors. And what they're doing is they're taking like wave service on an existing fiber line. And I mean, building a fiber cable, I mean, we're talking hundreds of millions of dollars for many of these projects.
Because I was going to start, how do I make a 00 competitor? Like, what's the material cost?
Yeah, it's pretty high. I would say one of the real advantage we have is our contributors today. They're all either deep in the blockchain space and they are willing to invest in improving basically the experience for all blockchains because they think it'll be a net positive return for them, or they're folks who have private networking already. And so it's Jump and DRW and these type and TerraSwitch and Latitude and these type of companies that already have some amount of private networks, but private networks are anti-network effect. It's kind of an oxymoron, but like if Jump builds a high frequency trading network, they don't want anyone else on it. But the thing with blockchains, you have to reach too many different locations around the world for any one company to wire them all up. And so it's a classic consortium model where everyone gets a better experience because they're working together.
But the fastest possible, you guys are starting with Solana, I guess, right?
We are, yes.
You have about 16% of the validators using you or something?
Yeah, just about that.
Yeah. So
and that's actually our testnet. We're not even like formally live on mainnet yet. So this is like our worst fiber. But yes.
So because the fastest possible Solana network or on 00 is just to have them all in the same room, right? How does
well,
so how does that work? Like how do we prevent everybody from just being in the same room? Because I'm sure you thought a lot about this.
Yeah, so you kind of got to think about this from the perspective of how do existing markets work and how are decentralized markets different? So we think of like NYSE and NASDAQ as global markets. They're not. They're hyper local markets. In fact, they're so local that they're located in one corner of one data center. And that is like, basically every stock exchange in the United States is located in New Jersey. And they're all kind of in the same data centers because there's a lot of power and value in being right next to one another. But those are kind of like point source moments. So with a blockchain, what you have is validators building blocks all around the world. And right now, there is a lot of value in that being distributed because it means that you can get transactions into a blockchain from many different places in the world. And there is some amount of fairness baked into that. Now, I think what we've seen from something like Hyperliquid is centralized blockchains can counter centralized systems quite well. You just look at the amount of order volume that Hyperliquid's been able to take off of Binance and centralized futures markets, and you're like, wow, this is like quite interesting. But we're not seeing, it's the same problem as an L2. An L2, like they're all centralized today, but like, we'll take those as the starting point. The single sequencer L2 model is a hyperlocal market. And so they're having to do all of these kind of games, like hiding the sequencer, like Arbitrum doesn't tell you where the sequencer is actually hosted. So they're trying to reduce the incentive to co-locate because this incentive to co-locate is really high. What I would say is over the long term, what we're looking at is we're probably seeing extremely hyper local blockchains like a Hyperliquid, like a Fogo, those types of systems competing with the traditional markets in like colo centralized systems. And then you have things like the multiple concurrent leaders proposal on Solana, which is basically to build blocks concurrently. And then you kind of like, you build a block in Singapore, you build a block in New York, and you zipper it together and you get a transaction ordering system. And the cool part about that is that actually can be faster than traditional markets. Because if you think about like a news event happens in Singapore, it takes time for that data to get to New York to trade on the NYSE. But if you have a node building a block in Japan at that moment, you can actually rush to that node, which will have an impact on the global state. And so that'll actually be faster than running your data back to the New York Stock Exchange, which is this really interesting concept where, and it only works if you can build blocks concurrently in multiple places. Because you effectively shrink the distance, the latency that any transaction has to get into the blockchain at that point. And that's what I think we'll see over the long term is, and this is kind of like the Solana take on the roll-up centric roadmap is instead of rolling up independent pieces of state into one L1, you're rolling up multiple concurrent block producers into the same global state. But it has the same type of effects where like the roll-up centric roadmap, the point of it is you can have multiple hyperlocal markets or multiple distributed markets that all sort of share one common language to talk between.
If everybody's on, well, actually, how does it work if loads of validators on Solana are in 0.0? Do everybody have to go on 0.0, or can it be like a competitor?
No, so we coexist with the public internet just fine. I think the real
does
question,
it become like a vacuum? No, like a vacuum, like a black hole where everybody has to go on 0.0 to stay competitive?
Yeah, I mean, there's a whole thing where like Ethereum decided a long time ago that the L1 was not going to scale. And who knows, that can always be revisited. But there was this idea of like 1 megabit connection and $100 Raspberry Pi, you should be able to run a node.
Yeah.
And you should be able to and that was just a value proposition the community picked. I pass no judgment if that was right or wrong, but
I do.
but that was a value that they picked, right?
Yeah.
And so we actually had this like moment at sort of the core dev, like, work on Solana. There's like, 7 companies involved as core developers. And there was a whole question about, is the public internet the thing we want to benchmark against? Are we willing to push the protocol past what the public internet can support? Because it's not a foregone conclusion that you're willing to do that, right? You can sort of say 0.0 will eventually have enough of the Solana network on it, or the Aptos network, or the Sui network, or whatever, or Monad, and to the point where you can say, hey, we can actually raise protocol limits because we have more connectivity. We can make blocks faster because now we're seeing a 30% to 60% increase or decrease in latency. And so it's really up to the protocol developers at what point you sort of say, hey, like, you can run on the public internet, but you're going to need to invest a lot of money in pretty beefy connections.
I've used Hyperliquid quite a lot, and I think it's a very enjoyable experience.
Yeah.
And I've
Built
also
a great product.
Yeah, and I've also tried Drift, including integrating with the API, like, trading bots and so on, and that was very, very difficult. Is it, and I'm sure you know a lot more about it than me, so is it tough to use Drift because the way Drift is made, or is it just like, so that's where Solana is capped at today?
I think there's kind of like an analogy here of like trading on Uniswap is a very different type of trading than trading on the Binance Central Limit Order Book. And I think that's kind of the right way to think about this. There's a lot of work being done on Solana to be able to do things like cancel prioritization, which, so like traditional markets have cancel prioritization in them. Hyperliquid can put cancel prioritization in because they, have a lot of power over the validator set. And they can just say like, hey, if you don't respect this, you're out of the validator set. And so that creates an experience that feels very similar to a centralized exchange experience. If you're trading on Jupiter, I would say that, so Jupiter at this point has lower slippage and lower fees than any centralized exchange I've traded on. You can do 10 basis points of fees on like sold USDC swaps thanks to like Humidify. Perps aren't there yet on Solana, candidly. I think there's a lot of work being done both by Drift and by others to get them there. But I think that is a great example of like that is a situation where the complexity of that product and the importance of things like cancel prioritization have made that like Hyperliquid has a very compelling product that they've built. But it kind of competes more with Binance, I would say, than it competes with the decentralized systems, because part of the value of something like a Drift or any other type of perps market is they're composable with the rest of the blockchain ecosystem. And Hyperliquid is an incredible product, but it is a product. It is not currently like an ecosystem. It's getting there, but they're a little bit apples to oranges, I'd say, at the moment.
I was just wondering if I was just wondering if the piece that was missing to get Hyperliquid like perps experience on Solana was what you guys are making, but it's more just perhaps because Hyperliquid is very specialized.
Yeah, I mean, I think we'll be able to help with it, but you have to remember this is an OSI layer 1, 2, and 3 network. So, it's way below like the VM layer or the runtime or anything like that. And so really what we're trying to do is give protocol developers a new set of tools they haven't had before. And then it's up to them to figure out what they want to do with that. So for example, we can provide precision timing on all data moving through the network. And so the 000 network will be able to tell you like, hey, this packet hit this router at this ingest point at this exact time. Now, does the protocol want to say, okay, we're going to honor that as effectively like a confirmation? And so, there's something called application controlled execution, which is like this idea in Solana that basically applications should have control over their block ordering if they want to. And, they could make use of that precision timing to be able to have a time aligned order book, for example. There's a lot of cool things like that that are doable, but we are sort of more foundational, lower level infrastructure. It still is up to the folks at Solana and Drift and anyone else who decides to adopt the protocol and the network as to how they want to like use that toolkit.
But you're sort of but I guess you're empowering them, like you said, with this. It's been a mantra, I know, for the Solana guys, and I think you also, which is increase the bandwidth, reduce the latency, right?
Yep, absolutely.
So that's what you're doing, allowing. Yes. Yeah, okay.
One of the things I learned, from my time at that Solana Foundation was there's always this incentive to build a complete product. And I think it's actually, unless you're building something consumer facing, it's usually the wrong answer in crypto. You should be building things as generic and low level as possible to enable smarter people than yourself to come in and say, hey, I know what I can build with this. And that is kind of our whole philosophy here is we can build like fully vertically integrated stuff, but like I think the real power is exposing it's the NVIDIA model, right? It's like, why did CUDA win? It's just like expose the underlying programming and people will do things you never thought possible with it.
That is so true. Like everybody was checking out the CUDA SDK when it came out, even though it's so hard to use, but at least it was there.
Yeah, and it didn't like modern compilers, like they just treat you like a baby, right? Like this actually lets you address things. And so like the innovation of CUDA was like, oh, software developers are actually smart, which is like a crazy thing to say, but like half of the work the FireDancer team does, it feels like, is like fighting with CPUs to let you actually address specific tasks to specific cores. Just a bunch of that stuff is just like they try, like modern operating systems and modern compilers try and abstract all of that away. And when you're really optimizing for performance, like you are writing code specifically for this particular core and this CPU.
Yeah, for sure.
How have you found so far then in terms of like the other point I wanted to mention actually, I was using Jupyter's perps the other day, checking that out a little bit. It's actually got a lot better. Like it's a pretty enjoyable experience now. Like it's a bit different to Hyperliquid, but the different products. Just a note on that. I was going to ask in terms of you mentioned then earlier that obviously 000 is in testnet right now. What's the response been so far, and how do you see how have things been playing out?
One mainnet.
So our testnet is a little bit different than a normal testnet. So our testnet is literally a test network, but it is running our production grade software. It just is, we have all the admin keys. It's not distributed or decentralized at all at this point. It's about 8 fiber links around the world. And our mainnet will be more like 55 different fiber links and much faster fiber links as well. And so even this little kind of test network, we sort of never intended this to get a lot of like stake and validators operating on it. It was sort of an accident. This was literally the place we were supposed to like break software and, these sorts of things you normally expect in a testnet. But a bunch of validators were like, hey, this is actually faster than the public internet, even just in this testnet format. Like, we should use this thing. And so we were like, okay, well, we've got to treat this as a mission critical piece of infrastructure now. And so we are launching mainnet later this month. And part of the goal of launching mainnet is like, we got to get testnet back into a place we can test stuff with it. So yeah, we'll be spinning up with about 55 fiber links. Many of them are 100 gigabit connections. And
all over the place.
Yeah. So we've got connectivity in, dozens of cities around the world. And so you sort of look at where does our connectivity mirror? It mirrors largely the major financial hubs and the major stake hubs currently, with a few fun additions onto that. So, Europe is very well covered. We've got, tons across the United States. The connections over the Pacific are the ones that are probably the most valuable initially. So we've got, 100 gigs from Seattle into Tokyo, and then a whole kind of Asia map as well. One of the cool things that we also are working on is this overland route that basically goes through Siberia and is like 100 milliseconds faster than the fastest line we have that kind of goes across the equator. And so there's just these things like this where you're just like, oh, these are massive performance increases relative to what you can do in the public internet just because of physics. Like it's quite interesting to see. And so when we kind of go live with mainnet later this month, our hope is most of the Solana ecosystem decides, hey, this is much faster. I'm gonna move over and give this thing a try.
And okay, that was the mainnet. So how do we make money from this if there's no token?
There is a token. It's definitely a token project. Anytime,
sorry, I didn't know that.
Anytime you need, and I'm not gonna say the token's a way to make money, but there is a token. And the reason there is a token is we have the same problem of any blockchain. We have to have unaffiliated parties aligned around the same common economic vision, and we have to do it in such a way that it's a win-win and shared upside. The difference is we're not a proof of stake system, at least not in the traditional way. So in a proof of stake system, stake is useful because it's securing state. Stake, like you don't need stake in a system to secure the momentary value. You need stake to secure the long-term value. You have whatever, $40 billion of USDC on Ethereum, like the stake is important for securing that. We are basically a stateless network though. We don't have any smart contracts deployed on us. Users aren't deploying funds on us. It's really just about the data flows in and out. And so our model is called proof of utility, and it works much closer to proof of work. And so we assign basically a Shapley value to each network link, and that's calculated based on the usefulness of that link above the public internet's performance.
At what value?
Shapley values.
What's that?
It's basically a mathematical concept about how much worse would a system be if one piece is removed.
Okay, cool.
And so we can basically say like, hey, here's our network graph. And if this link went away, how much worse would the network be? Well, that assigns a value to that network link. And this was there's a whole Nobel Prize winning paper from a few years ago, all about like the applications for these things. And the nice part about this is it means that the rewards are always proportional to the usefulness, which is basically how Bitcoin mining works. If you have 10% of the hash power, you get 10% of the rewards averaged out over enough period of time. And so that's exactly how we do rewards on the network. And so, validators pay and RPCs pay to use the network. And then those payments are then, distributed out to network contributors as rewards, with about 50% of them burned.
What's this token called? Does it exist?
It is not launched yet, but the ticker is going to be 2Z.
Excellent. Nice. Wow, I thought I was making a joke here, but there's actually a token, so we can make money on this.
It's definitely a token project, and we need it to be a token project. I think this is the thing where like tokens are just the best used system of aligning incentives apart from religion that we've ever come up with. And I think that is like that is awesome. That is core to making this work.
Yeah. Okay. Well, those were my 00 questions. Honestly, we've done a lot of podcasts over the years with like a lot of people. I don't think I've ever asked so many questions about what some project. I think it's because it's technical.
Yeah.
So there is a question after one mainnet and one token. Like
Yeah.
there's more than that.
Right. I get that.
Oh, that's good.
Yeah, we're not fractionalizing NFTs.
No, exactly. So, what do you think? Where are we at in this cycle, in this thing we're all living through together every day, whatever we call it? Where are we at? Where are we at?
I mean, I feel like I have a lot of fairly contrarian takes on a lot of this stuff. I think there's a lot of like kind of unnecessary doom and gloom. I think it's pretty hard to say that there was like, if you, it's just the fun thought experiment of like, if you could go back and pick to be born in like the same class structure you are now at some point in history, would you pick any time other than now? And
no.
Right.
Sorry, the 1980s, but just for the culture.
Yeah, sure. Okay. Yeah. I mean, there's
I
some concerts
want
maybe you want to go to.
In 1987.
Okay. There you go. But you know, it's one of these like these crazy things where like, I have a lot of friends who are sort of like very concerned about the world. Like, yeah, you should be concerned about the world. Things are scary. Like they're a lot less scary than like the mid 80s when the United States and Europe and Russia had thousands of nukes ready to go pointed at one another. Like I think a lot of times we look at this stuff and we kind of have a perception of like, oh, the world is only getting worse. It's like, no, the world is changing, but it is almost always changing for the better, at least in the
for sure. Like in the 80s, wasn't New York City just extremely dangerous?
Yeah. It's incredibly safe.
People don't think about that. No, that's
Yeah. So I think on the macro level, like we're doing pretty good. I would say we're in pure. So like every time you have some new technology emerge on the scenes that really changes the fundamental way people are able to communicate and understand one another, you have some wars, right? This is like the arrival of the printing press had 100 years of war in Europe. The advent of radio basically tracks very closely with World War I. The rise of nationalism over sort of like the 1880s into like the 1940s is responsible for a huge amount of war, and you can kind of see like then nationalism comes to the Arab world, and lots of problems happen. It comes to Africa, lots of problems happen. Like there's these like social systems that move throughout society, and people are very bad at adapting to them. And I think what we have now is we have this like the internet is kind of. Did you ever read like Lev Manovich? A lot of his like original theories of internet content from like the late 90s.
No.
He's got a lot of really interesting work that pretty much predicts the rise of like TikTok and 4chan and these type of like hyperlocal communities that have very insular information systems, but are also very universally understood. The paper or book is called Theories of New Media. But it really predicts all this meme culture because it looks at like how is content. He's a McLuhanite, so he's very much like the medium is the message, and so how do the technologies of the internet dictate the type of content that's kind of gonna come out of that? And I think we're still in this place where like we don't know what to do with that. Like, and this explains why meme coins go crazy. This explains why like disinformation travels so quickly and everyone feels like they're a conspiracy theorist now, because we had the same thing basically happen when physicists started realizing like, wow, like classical Newtonian mechanics really don't work at all. Like there's all of these like incredible accounts of like mental breakdowns of people working in the sciences when they realized like the fundamental fabric of the universe was different than they thought. And we're kind of going through the same thing.
I feel now.
It's how people in TradFi feel, but I think it's also how like normal people feel when they sort of see like a rise in political violence and these sort of things spilling out from the internet into real life is like, oh man, like what have we unleashed? And it's like, well, yeah, but at the same time, like this is how society always works. We're always going through changes, and it's just about adapting to them.
Yeah, I mean, that's pretty macro stuff. I meant more like, is Solana going to be $300?
Oh, okay, great. We can talk about that. Look, I think there's still a lot of wind in
Printing press, yeah.
Sorry. See, this is why you shouldn't do them live. You could just cut that whole thing out.
It was great. I thought it was really good.
I love it.
Yeah, look, I think there's a lot of wind left in this cycle. I think what we have now is we have a lot of strong fundamentals across the industry that are really showing no signs of faltering. I mean, I think we've seen. I've been, not to go back to macro too much, but I have been surprised how resilient the global economy has been to some pretty extreme shocks from tariffs. Not like the inflation shock plus the tariff shock, like things continue to run quite well. And, you look around at crypto and you kind of see these things compounding. I mean, one of the cool things about the rise of digital asset treasury companies is it creates this avenue for traditional fund structures to engage with crypto. But it also has this kind of side effect of these treasury companies are very hard to unwind. They're very hard to unwind. And so you kind of remove the tokens from circulation when they go into a DAT. And it's sort of like how corporate governance, like the rise of Vanguard ETFs, like did a lot of weird things for corporate governance because it meant that your shareholders are now more distributed. And so like the high powered shareholders end up effectively having a little bit more power than they might have before. I think you have a very kind of interesting effect happening with DATs as well, because DATs are probably not going to vote. They're probably not going to participate in governance because anything they do is risky. And the goal of a DAT is to be an incredibly simple story that you can sell to asset managers that don't really understand crypto, at least for the next few years. We'll see. So I don't know. I'm pretty excited to see what the next kind of 12 months have in store for us.
Because with the ETFs, we were talking about this for so many years, and I was like, boom, this is sick. We get the ETFs now because ETF, it's the boomers, so they'll just buy the coins that never sell.
Right.
And then within months, we saw that these are the most paper-handed people that exist.
Yes.
The ETF people just sell immediately.
Yeah.
So I
don't think it's retail.
I never thought about this that thing before, that they're actually more sticky, I guess.
Yeah, I mean, if you think about it, like the only way a DAT really starts unwinding is if it fails.
Yeah.
Because the whole point of a DAT is to acquire, like the nav gap on a DAT. It's all about like, hey, if you're in earlier, your ether to shares ratio or your SOL to shares ratio is lower, and as the DAT accumulates more of the digital asset, that gap widens. And so it is kind of a very different growth pattern than you'd see in a traditional company or traditional stock. But what that means is if they ever sell off any of the digital asset, they're basically selling off their reason to exist. And so you would sort of see them fail catastrophically and go through a bankruptcy and say, hey, look, we're selling everything. Maybe they get acquired, but acquired is also still continues for those tokens to be locked up. And they don't have a distribution mechanism. I mean, they always could change their charter of bylaws, but it wouldn't make sense for them to pay like a cash dividend by selling off some portion of their digital asset holdings, because the whole game is digital assets per share.
Yeah, for sure.
Yeah.
Cool. You mentioned Monad before. Was that a random example, or are you it's gonna be some Monad on 00?
We will work with everyone, I will say.
Okay.
We are truly building this as base layer neutral infrastructure. And so there's many networks we've talked to about support for 00. There's 2 or 3 that are actually already working on it. So the first is Shelby Systems, which is a storage network that Jump and Aptos are building. That is basically meant to compete with AWS S3 or Cloudflare's C2. It's not like what IPFS or Arweave are, which are like much more long-term storage. This is meant for like hot, rapidly read storage. So it's a different type of product. They're working with us already. They're going to build that whole product on 00. There's a new blockchain called Through, which is also planning to work with us. And then we've been talking a bunch with the Fogo team as well. They're a little different because they're running in a bunch of data centers. And so we're not like, there's different areas where 00 can help because obviously in one building you don't necessarily need what 00 has to offer besides maybe the multicast.
Right.
But they have a whole system that moves basically the block building committee around the world. So there's and we'd love to work with other networks as well.
Cool. It's I don't know, is there anything else that's exciting you in this space, outside the space? Because like we're coming out of this European summer, which for some reason, man, when I know nothing about TradFi, right? So so in crypto and Bitcoin in the beginning, it was like there was no concept as like a summer vacation.
Yeah.
People were just always trading and grinding and this stuff. But as we matured a bit as an industry, I started hearing stuff like sell in May and walk away. And I thought people were joking. But I now understand that in TradFi, that is just the hardest reality I've ever heard of.
Yeah.
It's like nothing happens until like October for some reason.
There's sort of this thing where like you can look at this and you can be like, wow, TradFi, like markets are so slow. They're only open for a few hours a day and they only open 5 days a week. And also like if there's a random holiday like post office day, the market's closed, right? And you're just like, what are we doing? The other way to look at that is like that's a very civilized way to run a market.
Yes.
And
this is so stressful what we're doing.
Right, 100%. Like you don't have guys on Wall Street getting like pager duty at 2 a.m. being like, our position might be liquidated because like it's like yes, there's pre-market trading, there's after hours,
because somebody's fudging the oracle.
Right, like when that happens, that's called
2008,
2008, right? Or the savings and loan like this stuff happens in TradFi once a decade. It's like a daily process in crypto.
Oh, for sure, yes.
And so I think the TradFi guys are onto something, but we also like can't put this back in the box.
Oh, so true. That's so true. But yeah, so we are getting closer to October, so things are kind of heating up. Twitter, which used to be 15 people, you're one of them. Is now more like, I noticed today it's like 20.
It's back.
So like things are happening. So
yeah.
What's like exciting for the rest of the year? I mean, not just 00 stuff, but anything.
Yeah, there's a project that I know two of the guys who've been working on it. That's like my disclaimer for this, but it's called Melee, and I think that's like quite interesting. They're basically doing competitive opinion markets.
Cool.
So you can sort of think about this as like, remember like a few months ago, everyone was like debating who would win, like one gorilla or 100 guys.
Yeah, of course.
Yeah. So the whole point of like poly markets in theory resolves to the truth. And in theory, there's a lot of work there with poly markets. But the goal of poly markets in theory is to represent real world, real life events. Yeah. So did X or Y or Z happen? Who won this sports game? All that types of stuff. Opinion markets are different. Opinion markets, you're betting on what you think everyone else will think. And it's a private market until the thing is resolved. So it's like, it's not, what do I think that, a gorilla will win or the 100 humans will win? It's, can I make the case in public that, my view is correct? And also, do I think enough people will be convinced by it? And so I think opinion markets are quite interesting. My critique of prediction markets has been forever, and we're seeing this become more and more true as they get more and more popular, is that prediction markets are cash flow bias. You can buy in, like the fact that the outcome of a prediction market is seen as a news event, like, oh, Trump is up relative to this other person in a prediction market, means there's incentive to bid up Trump if you are on the Trump team, or to bid up, and so prediction markets, I think, have almost peaked in terms of their actual usefulness in predicting events. I think they're nowhere near peaked in terms of their value or what people are going to actually continue to trade on them.
Okay, that's I like this. This is a spicy take because we're gonna have soon. We're gonna have Paul Stortz on here, who is like super into prediction markets. But either way, it's a very exciting space, and this opinion thing, I haven't heard of it. It's a bit hard to find this website, but it's melee.markets. Melee.markets, spelled MELEE, and there's some kind of a wait list. I'm gonna join now.
Nice,
cool.
Yeah.
Anything else we should talk about?
I don't know. You tell me.
Let me. See
I think
what
we're
else
pretty
happened
good here, Blake.
Yeah, I feel like we've covered a lot here. I mean, I came
Yeah.
into this honestly with very little understanding of the actual exactly what
Sure.
00 did, and I feel like we've got a pretty good baseline
Yeah, me
understanding
too.
now, which is great. So thank you for that. Really
Excellent.
appreciate it.
Yeah, awesome. And I'm on the Melee waiting list where we let maybe in.
Me too, man.
Cool. All right,
Awesome.
Austin. Thank you so much. I hope to see you in person sometime at a conference or something. It'd be cool.
Yeah, definitely.
And in terms of where they can find out what you guys are up to, I guess they can follow. Do you want to share the links of where they can keep up to date with 00 and yourself?
Yeah, so it's at 00 on Twitter, all spelled out, 00.xyz. And that's kind of where you can find the most up-to-date info. If you're a Solana validator interested in joining, you can go sign up there and connect to the testnet. If you have fiber you want to contribute, you can also get in touch with us there and join the protocol.